Afternoon, everybody, and welcome to the St George Business Chamber webinar this evening. Is your business ready for life after lockdown? Just a few housekeeping matters to go through first, please. While I get the slide starting now, there we go. Please note that we are recording this, by the way, and the webinar will be available on the Chamber's YouTube page and also on the website for you to access. And probably by tomorrow, I'll be sending out to everybody who is registered to attend today the contact details for each of our presenters. You'll get their name, their phone number, and also their email, so you can follow up with anything you might like to follow up directly with. So, yeah. There we go. So please note, the information we're presenting tonight is general in nature. You should consult a relevant industry expert for advice regarding your individual business situation, and the Chamber and our presenters won't be responsible for any decisions you may make after attending this webinar. And the last paragraph is really important, especially after our Premier's announcement today. Rapid and frequent changes in legislation by state and federal governments mean you should always check to ensure that your business decisions are based on the most recent and relevant information. Something that's current today may not be current tomorrow. So please make sure that you do check to make sure that you are getting the absolute latest information in each case. So our presenters this evening. First, we have John Reilly from Key Tech Solutions. John is an accountant and a small business specialist, specialising particularly in trade-based businesses, manufacturing and engineering. And John has been operating Key Tech Solutions since 2004, but has a lot more experience than that. Jenny Draper from A Girl Friday is our bookkeeper this evening. 5 years as the owner of A Girl Friday, and she's previously owned business in finance and events management. 10 years in the RAAF, and has had many years in hospitality roles and other ventures. Lakomy from Cordis is our insolvency and restructuring expert. For over a decade, Cordis have been providing innovative advisory, restructuring and turnaround and insolvency solutions, and have grown to become one of Australia's largest and most trusted business advisory firms. Vanessa Caputo from Thornton and King Lawyers. Vanessa is a property law expert, and today she's specialising for us in retail and commercial leasing law. Darren Wrigley from LiveNOW Consultancy. Darren is a business coach. Many of you may know Darren from his time with Realise Business. Darren specialises in sales and marketing for small business owners, helping them to close more sales and increase their overall revenue and profits quickly and inexpensively. Bianca Schwartpaul, virtual assistant and digital marketing expert today. Bianca's specialty is helping businesses to ensure the right message is delivered to the right person at the right time, and to alleviate some of the pressures small business owners face. We all want that. And finally, finishing up with myself, Trevor from Development Pathways. I'm also the liaison officer for the St George Business Chamber. I'm speaking on HR matters relevant to small businesses today, micro businesses, and my speciality is looking after those businesses that tend to otherwise fall through the cracks. So, John, over to you, and I just need you to say next slide, please, John, and I'll click them across for you.
Okay. Thank you, Trevor. Next slide. We'll start with that.
Yeah.
Oh, that's not my presentation. Have you uploaded the wrong one?
How's that?
Okay. That's not. You must have downloaded it before I finished it, Trevor. That's all right. Okay. I'll have a look at the one I've got. If I just go with what I did prepare differently.
John, I'll take it back to your home slide in that case.
Yeah.
And leave it there and let you speak. Sorry about that. Away you go.
No, that's okay. I think I finished it off last night. So my focus was going to be talking on cash flow, just trying to get yourself out of this lockdown recovery and talking about cash. Cash is not income, and obviously the cash is the lifeblood of any sort of business. And I was going to firstly start talking about income versus cash. What is the difference? Your income is the sale of your product or your service. So you come in, you do your tax return. I've actually prepared the tax return, prepared an invoice. That is income. I haven't got the actual cash at that point. When you actually pay for my service, you give me the money, then that's actually cash. And that's that's important, not so much your income. So depending on your industry, you could be in like a retail industry where your income and your cash generally are usually the same. You buy an item, you pay for it, you get it straight away. So if you're in a trade business or you're in a professional business, you usually have some payment terms, say like 14 days. You make the sale and then you've got to allow that 2-week period on average that you actually get paid for that money, and that's when you have the cash coming in at that point. All right, so the next slide I was going to look at is looking what you've been going through the last few months as we've been locked down. Just looking at where has your cash been coming from. There's lots of sources of cash coming in, but from the last few months, if you're looking at have you been having to throw money in yourself into your business? That's obviously cash coming into your business. Are your customers paying at the moment? And if you're like most of my clients, government grants. I think about 90% of my clients are actually getting government grants at the moment. And one thing just to be aware of, they're being turned off. Those taps are stopping. And I know I've got a couple of clients who are doing quite well off financially with some of these government grants, and just be aware of that. That's not going to happen. You're going to have to work for your money soon. So a little bit different there. Next, I was looking at, obviously, that we're looking at what you need to pay. So you've got your cash coming in there. You're looking at what things you're actually paying out. You're looking at cash going out. You're looking at things like taxes. You've got to pay your taxes. You've got staff. You've got to pay your wages. You've got suppliers. Obviously, you buy materials. Rent, that never goes away. However, at the moment, if your business has been struggling, there is a grant there to reduce, not a grant, but there's legislation there that your landlord has to agree to a rental reduction or a deferral. You have utilities to pay for. You always have loans and finance. If you have that for your business, consumables, you have to pay your accountant, very important part, that one. Any other professionals, and one very important person you need to pay is you. Any business owner, like you're in business, you're going to make sure you pay yourself. You're not having a business to pay your staff. And just with cash flow forecasting, the issue is all about timing. Timing when the money comes in, timing when the money comes out. So the money comes in, your cash coming in, talking about retail, your cash comes in on your day of the sale, no problems at all. Tradies or professionals come in a little bit after that, could be 2-week period, etc. Other sources of funding there could be just your loans. You might borrow some money, throw some money into the business. And the same thing is personal money. A lot of people prop up their businesses when their business is struggling. Not the best idea, and I'm sure Andre will agree with me on that one. You want to keep that out as much as possible, but it can be a solution of cash coming in. And the same thing again, that's cash coming in. Cash going out as well. So tax payments. Now, so not tax, wage payments, I should say, after tax wages. They could be weekly, fortnightly. You actually don't pay your wages tax until a later date. So you're talking about your BASs when they're due. Superannuation's due 28th day after the end of quarter. So you've got plenty of time there. Your supplies have account terms. Your consumables have account terms. Obviously, your loans and finances are scheduled, and pay your accountant immediately, and make sure you pay yourself. I'm not sure on the slide there, Trevor, if I got to it. I do have an example of a cash flow example. And this is just a rough monthly one, just to give it a rough idea. So you always have your start bank balance, just to work out how much cash you have. And then what sort of cash you expect to receive. So it could be sales you made in the previous month. You expect them to be paid this month. Take that into account. So I'm talking, my example talks about 40 grand coming in, $10,000 start bank account. Then you've got to pay your staff net wages, so after-tax wages. That's what you need to pay. You've got to pay your suppliers, your rent, car loan repayments, and I'm assuming this is a month where you actually make your BAS payment, which is obviously at the end of the quarter. So you've got to allow extra cash to be available to make that payment. Looking at consumables, and obviously paying yourself, and I'm also talking about superannuation. All those outflows that I've put in there add up to about 43,500. So technically there's a net outflow of 3,500. However, you paid your super and you paid your BAS payment. So that's all good there. So and I think that's the final screen there, Trevor, although I do have something different. Okay. Thank you, Trev.
John, thanks for that. I'm sorry about the muck up with the slides, everyone watching, but those who are paying attention and taking notes, all very, very relevant points, that's for sure.
Yeah.
So moving along, Jenny Draper, our bookkeeper. There's a nice segue from accountants to bookkeepers, of course. Jenny, same deal, just hit me with a next slide, please, and I'll flick them through for you.
Thank you. Gee, that's a pre-COVID picture. Okay, so welcome everyone. I'm Jenny Draper from A Girl Friday Bookkeeping. So what does your what does your business look like after lockdown? So did you enjoy the time off, and can you work part-time? Is the business growing? Has the business changed? Has the business changed focus? Did you have a bricks and mortar shop that you're now online? Has your business boomed and you need larger premises, more staff, or your business has boomed and you don't know where to go? Everything that you want to know for your business all stems from, exactly as John said, the cash flow and the timing, paying for your consumables and paying for yourself. So how do we work out the answers for this? So this is what we want to do, but how do we do that? Thanks, Trev. So what you need to find out is what your expenses are. So what they have been during COVID, but what they are in the real times, whatever the real times look like now. Know what your liabilities. So as John mentioned, your loans, your ATO, your super, and when you have to pay those. So as he mentioned, there is it is September, the end of the quarter. So you have those payments due at the end of the super, or the end of the quarter. What is your cash flow? Do your clients pay on time? How much do you actually owe your suppliers? Have they been on hold while you've been on COVID? Your staff costs per hour, how have they changed? I notice I've seen quite a lot of clients who have emailed their suppliers, or the suppliers have emailed them about the increasing costs, and that seems to be quite across the board, that people are putting their prices up where they can. So are your accounts actually correct? Are they up to date? Or do you have a spreadsheet that you might or might not do, and you've got a really good use of a highlighter and a piece of paper? That isn't exactly the best accounting system. So let's look at the next one. Thanks, Trev. Thank you. So the step one is, are your accounts correct and up to date? They need to be compliant with the ATO requirements. So GST, expenses, revenue drawings, and for a lot of you, this is the boring part of business, is the accounts. So as I tell all my clients, lucky for you, I am the boring person who loves doing all of this. Are your accounts in real time? So your bank statement you get at the end of the month after you've already done everything, that's not current. Your bills, are you keeping them in a pile, or are you keeping them in a folder? Is your payroll up to date? Do you know that the payroll's changed? So you need to have somebody, if it's not yourself, to sorry, tech problem. Reports. Have you produced a profit and loss balance sheet? This is all the things that you need to do to answer those questions in the next slide. Thanks, Trev. Right, step two is to build your knowledge stack. And lucky for you guys, most of these people are here today. So these are the people that will help you with your business. The bookkeeper, me, your social media whiz, which you'll hear from Bianca later, a lawyer. So they will either help you get out of trouble or to help you get the money back for your rent or for any other commercial situation that you might have. Virtual assistant. So now's the time to work on your business. Let someone else do the boring things like accounting and marketing and media. Your business coach, very important coming out of COVID, where your business is going. Insolvency specialist. Let's hope that we don't need that to get us through insolvency, but to save us from insolvency. Insurance, HR specialist, a definite must. HR is changing quicker than Service New South Wales can make a change. Asset finance, IT specialist, and your own health and wellness. All of these people will need you to start with your accounts. How much do you have? How much have you got coming in? How much is coming out? And can you afford to make some of these changes? So that is how. Who? The bookkeeper and the accountant. So just quickly, the difference between a bookkeeper and accountant. The bookkeeper looks after a part of the accounting, which is the bookkeeping part of the accounting, whereas the accountant builds on that information. Bookkeepers do the first steps, getting your account in order so that the accountant can then look at your bigger financial picture and help you with the financial analysis such as cash flow and all of the analysis that you need for the bigger picture of your finances. So the bookkeeper will keep the accurate records and the accountant will then look at everything, including your superannuation, other business concerns, your personal accounts, to give you the best financial advice that they've got. So next slide. Thank you. So everyone thinks of bookkeepers. Well, in the 50s, 60s, 70s and 80s, before we had computers, bookkeepers wrote in a big, lovely red book and we kept accounts. We did payroll in little yellow envelopes, for those of you who are that old. And we do stuff that accountants want us to do. The other things we do, accounts receivable, payable, payments, GST, ATO compliance, single touch payroll, etc., etc. Okay, next slide, thanks. All right, now some of the opportunities that you may have missed, unless you've got a great interest in research or a great bookkeeper or accountant, the micro business grant, the applications are still open to 18th of October. So if your turnover was between 30 and 50, 75,000 and a decline of 30%, you can still get in and apply for those. JobSaver payments, application is still open 18th of October. And depending on which direction the wind is blowing as to what the heck last date that Service New South Wales will close those payments. But either way, applications still currently open. Small business fees and charges rebates are still available till 30th of June 22. If you jump on the ATO and look up COVID assistance, you'll get all the information for this. Dine Discover vouchers has been extended to June 2022 and there's talk of more. And ATO initiations. How about some ATO help? Accelerated depreciation, instant asset write-off, loss of carryback. All of those things are for your accountant. So speak to your accountant about those ATO things. All right, another thing you might have missed is a tech stack. Now, I won't spend too much time on this because tech's not interesting. So if you've been managing your team from afar or you've been sitting on the couch and found time to look at building your tech, the main thing is start with one good piece of software such as Xero, or it might be your CRM, or it might be an industry-specific software. Start there and build your technology, because the less hands-on manual labour tasks that you or your staff do means more time on your core business, which means higher profits and more personal time. Thank you. And this is just a visual of how you can stack up your technology to help streamline your processes. Thank you. Now, some of the problems or pitfalls that we promised that we would highlight for you: superannuation liability. If you are liable for superannuation, don't forget the July to September payments are due on the 28th of October, and there is no flexibility by the ATO on this. If you do not file each quarter by the due date, you will be liable for the SG, or superannuation guarantee charge. You have to put in a statement and that you will be charged the shortfall plus a 10% per annum interest plus an admin fee. But please beware of scams when you're reporting all of this sort of things. A lot of scams online. But do remember that your superannuation liability needs to be at the top of the payment list. The budget. Again, going back to what John said, very important. Work out your budget, even if it's very basic, on what you've got coming in, what you've got coming out, what you can afford to change, and then take that to your advisor. Can you borrow money? Can you do what you've planned? Do you need to see your commercial asset finance person? Can you afford the repayments? If you don't already have a tax provision account, if you keep your GST and your PAY provisions in the main account, can I suggest that you move that into another one, so you don't fall into the pitfall of every quarter having a big bill, especially as we come out of COVID, if the reopening is very slow. Do you have a war chest? That's just spare money, like a long-term savings account in case we go into lockdown again. Your staff wages, do they reflect the increase that happened on 1 July in the middle of COVID? Definitely check that. If there is another lockdown, government grants, you must have your BAS submitted. So go back to slides 1, 2 and 3, get your accounts up to date. Do you have borrowing power? Get your accounts up to date. So your staff and clients also expect a lot more interaction. Are you ready for that? Do you have integration with MailChimp, for instance? That's a great first step into keeping your staff and your clients' contact up. And if recovery is faster than you planned, do you have the cash flow to actually purchase those supplies? So that's a tricky one. So that's just a few things to be aware of, and that's it. So thank you. If you do have any questions, there's my details. Thank you.
Thank you, Jenny. And speaking of questions, those of you joining us this evening, there is a Q&A box on your screen. Don't type into the chat box because you won't be able to put anything in there, but if you type any questions into the Q&A box, we will get to as many of those as we can for you at the end of the webinar today. So moving across to Andre Lakomy from Cordis. Andre, the floor is yours, and just give me a nudge when you'd like the slides moved, please.
Cheers, Trevor. And thanks, John and Jenny, for your presentations, because it's a great segue into what I'm going to cover off now. So just as Trevor mentioned at the top of the webinar, I work at Cordis. We're a boutique advisor and restructuring firm, and we focus on assisting SMEs and individuals facing financial distress. And I'm one of the partners there, and also a registered liquidator. Next slide, please. In terms of the current state of play, look, some of this is just repeating what you probably already know, but obviously there are a lot of businesses doing really, really well. You know, players like luxury car dealers, for example, JB Hi-Fi, your Good Guys of the world doing really, really well. And there's certain businesses, obviously, which are really, really struggling, and not necessarily because of any fault of their own. It's just maybe the actual industry they're in. And obviously coming to mind is hospitality. For those that are struggling, there is a lot of government support out there, which John and Jenny had mentioned, you know, business grants, JobSaver, disaster payments, tax relief, rent relief. And one of the things which is really keeping businesses afloat at the moment and helping them is the fact that the ATO are doing really, really nothing with respect to recovery at the moment. So they're not sending out DPNs, they're not sending out garnishee notices, and they're actually, one of the things they are actually starting to do, though, is they're starting to send out letters to business owners threatening to report the owners to the credit reporting bureaus if their debts are over 100 grand and outstanding for 90 days. So whilst the ATO have certainly taken their foot off the pedal in terms of enforcement action, they are sort of starting to ramp things up. I guess in terms of the big uncertainty at the moment is, you know, when is the ATO actually going to start pushing the button in terms of enforcement, because that's going to create a lot of stress for a lot of businesses. And the general thought process is that they may actually not start pushing that button until after the election next year. And I guess the big uncertainty is what's going to happen once that ongoing support disappears. Next slide, please, Trev. So in terms of post-COVID, so this is, I guess, when, you know, the world essentially gets back to normal, you know, what should business owners be considering? And what I've done there is I've essentially sort of divided things up into businesses that have been performing well and those that are struggling. So for those that are performing well, it's really, really important that they do a bit of a reality check and really sort of assess, have they performed well because they've actually traded well, or have they performed well because they've been propped up by government support? Look, if they have been trading profitably, look, kudos to them, and that's great. And the big question is, how do they continue to trade profitably, you know, in the post-COVID environment? And for some of the business owners, they'll have to look at, will they actually have to adjust their current trading model? So some business owners have actually performed stronger during COVID than pre-COVID. And they'll have to work out that, once COVID comes to an end, will they have to adjust things to make sure they fit back into the real world? For a lot of business owners, there will be opportunities available to take advantage of, unfortunately, other people who haven't performed well. So rather than just growing their business organically, they can look at potential opportunities in acquisitions, potentially look at taking advantage of competitors that have struggled and potentially picking up some assets cheap, liquidated businesses, etc. So rather than paying for a business as a going concern and paying for goodwill, a lot of opportunities out there to pick up assets and distressed assets. One of the other things that business owners need to really, really monitor is their debtors, because when the government support comes to an end, there's going to be a lot of businesses out there that are going to be liquidated. And if your debtor book is made up a lot of those businesses, when they all start falling over, that's going to impact your ongoing viability as well. And a lot of business owners will see a lot of bad debt coming through their books and a lot of collections being delayed. So that's a real important focus of every business owner, to really keep on top of their debtor book. They may have to look at offering incentives for early payment and those sorts of things. And they may even have to look at things like debtor insurance, which is a great protection for business owners if their customers fall over. Conversely, for businesses that are struggling, the obvious question there is, how are they going to keep surviving without the ongoing government support? How are they going to pay all their costs, particularly if they've been, propping up those costs with the cash handouts from the government? But also at the moment, a lot of business owners are supplementing their decline in revenue by simply not paying their tax. They're not paying their PAYG, they're not paying their GST. And as I said, that's all going to come to an end. With a lot of business owners as well, they're also going to start getting a lot of pressure from their customers in terms of paying their own bills as well. So a lot of demands, and business owners really have to work out how they're actually going to pay those debts, and particularly the legacy debts that built up, because I think it's fair to say a lot of business owners have been supporting each other and letting some of those debts accrue. And when COVID comes to an end, they're going to start calling in those debts. So that's going to be an issue as well. As I touched on, a lot of companies are building up a hell of a lot of ATO legacy debt at the moment. And that's one of the ways that they're supplementing their decrease in income. So when the ATO starts pushing the button on that enforcement action, they're going to have to understand, well, how they're going to deal with that. Are they going to try and enter into a payment plan? Are they going to try and access capital, etc., and try and deal with those debts? For directors, they really have to keep in top of their personal guaranteed debts. For businesses that are struggling, we typically see directors, and understandably, start being a little bit selfish with respect to what they do with their cash. They start diverting their cash to paying the debts that they actually have guarantees on. And that can actually mean that some of the other creditors don't get paid. So that's important as well. And as a director, one of the key things, they really have to be on top of insolvent trading risk. So ultimately, down the track, if their company does fall over, one of the things that a liquidator does look at is, can they potentially sue a director for insolvent trading, and the director is personally liable for those debts. So that's a really important thing. And unlike the position in 2020, where there was a protection for insolvent trading for directors, in 2021, the government hasn't provided that same protection. So it's really, really important. Some of the businesses as well are going to find it hard to get staffing, and hospitality is a really, really big issue there. So, during COVID, when all the hospitality venues have been shut, a lot of employees have gone and got, I guess, what you might call sort of more regular jobs, working in call centers or whatever. They've realized that they're actually earning a really good pay packet without having to work those long weekends, work when other people are celebrating and going out to dinner, etc. So the hospitality venues are really struggling to get staffing at the moment. One of the things I see a lot is, and John actually mentioned on this, people are starting to supplement their cash flow with dipping into their savings or dipping into equity that they've built up in their houses with respect to the increase in properties at the moment. So that's another issue as well. Just pop back for a minute, Trev. If they do put money into a business, it's really, really important that they seek the proper advice from someone like Vanessa, the lawyer on the panel, because they can actually protect their loan and elevate it from an unsecured position to a secured position. So if the business does ultimately go belly up, they are in a higher priority position, sort of should liquidate a bit of point, and that's really, really important. And I do see a lot of sad situations where a lot of people sell their houses, tip the money into the business, they haven't protected themselves, and they get nothing back. And just the catch line there at the bottom is, and Jenny and John have already touched on this, just cash flow is critical. Every business should have at least a 12-week cash flow going forward. Next slide, Trev. So just typical warning signs for business, and this list is by no means exhaustive, but this is what we generally see. Obviously, business interruption, whether it's COVID or otherwise. There's a lot of zombie companies floating around at the moment. So essentially that's the living dead. It's a company which is merely surviving off the back of government support. Companies which are incurring ongoing losses, cash flow issues, non-payment of ATO debts and super. Typically when we get involved in a company, it's always the ATO and super which hasn't been paid. Aged debtors, so your debtors blowing out, lots of bad debt expense, and also your aged creditors blowing out as well. So companies which essentially haven't monitored and manipulated and looked after their working capital position, they're typical warning signs for a struggling business. And the key thing is that the business owner is stressed out all day and night looking at these sorts of issues. They're distracted from running their business, which is really, really important. Next slide, please, Trevor. So options available. Look, the earlier we get involved, the better. But the worst possible thing a director can do is do nothing. If they do nothing, things just get worse, and ultimately, creditors may actually take control of the company. It may be wound up, and they lose control of their own destiny. So that's really, really bad. Moving along the spectrum there, if the company's not in too bad a position, we can provide some crisis management or turnaround. That is an informal service where it's done behind the scenes. However, it may be more appropriate to put the company through a voluntary administration or liquidation, which is a more formal process. There's lots of considerations that need to be taken into account when a director decides what they want to actually do. And I've listed a few of those there. But really, it's funny. One of the first things I ask a director when they come and sit with me is, in an ideal outcome, if I had a magic wand, what would you want me to do? And sometimes directors just say, look, Andre, I've had enough. I just want you to shut the thing down, or I just want you to sell my assets, etc. Or some directors, want to pay back everybody and do the right thing, be a great corporate citizen. But unfortunately, what directors want to do doesn't always align with what they can do. So my job when I sit with directors is to understand the situation, understand what their attitude is, understand what they're trying to achieve, and then guide them through the options and what they actually can do. Next slide, please, Bill. Not Bill, Trev. And this is a typical scenario. And we see this all the time, particularly in the SME market. So particularly during COVID, a lot of businesses have been got a good core business. They're trading well, but again, they're being impacted by COVID and getting a lot of government support and renter relief. They've been paying their suppliers, they've been paying their employees, but unfortunately, they haven't been paying the ATO, and they've racked up a lot of legacy debt there and some supplier debt. A couple of different options. As I said, if they do nothing, things are just going to get worse. If they go and see someone who knows what they're talking about, they can talk to them about the options. One of those might be putting them through a voluntary administration process, which allows the business to keep trading with various protections. It can actually result in the company being saved. It does require creditor approval and typically an offer to compromise creditor claims. Or else a company can be liquidated, and a liquidation doesn't necessarily have to be a bad thing. A liquidation can be a process where a business is restructured, put into a new company, assets are sold, and allows the business owners to start again with the same business with a clean balance sheet. But one of the critical things there is that needs to be done properly. It's absolutely critical that they don't do what's called a phoenix, which is basically transferring assets for less than market value, because assets will come down on really hard. And if any business owners are being sort of coached along those ways by any advisors, it's really a massive red flag and should be ringing alarm bells. So whatever it is, it's really important that all the options are considered and the most appropriate option is chosen. Next slide, Trev. So that was a very high level overview of what I do, the types of discussions and decisions I make with directors. If you do have any issues in this regard, please feel free to reach out to your accountant or your lawyer or an insolvency practitioner. Not necessarily myself, but someone else, if you know someone. Most insolvency guys should be willing to have a chat to you without any fees being incurred going forward until a sort of a formal arrangement is agreed upon. Cheers. Thanks very much.
Andre, thank you. And look, that folks, that really does wrap up the first three presentations nice and neatly, with some really common themes there. I think we're seeing, particularly around cash flow, cash flow, cash flow. I think if John has kicked it off the right way, albeit with the bad slides, but cash flow, cash flow, cash flow, and knowing where you are is really important. So moving right along, Vanessa Caputo from Thornton and King, again, our commercial and retail leasing specialist.
Thank you, Trevor. Yeah, you can change the slide now. So I guess cash flow is still continued topic here, only because a lot of people have had rent deferrals, which now they're going to have to pay back during the term of the rest of the term of their lease. So again, you know, there is going to be that issue. That's my disclaimer, but we can get past that, Trevor. You had one at the beginning, so that's fine. Look, many of you might have seen this. It's the code of conduct. So we've all been relying on this code of conduct to get our waivers and deferrals and things like that. Now, a few of these points are now relevant now that we're coming out of all this. So number one is still relevant. So landlords cannot terminate leases due to non-payment of rent during COVID and a subsequent recovery period, which we're really getting into now. The other one that's still important is obviously number three, because we've got the whole deferral of rent. So if you had your rent deferred, you know, it does need to be paid back eventually. So that's another thing you need to calculate in your cash flow. And again, you know, within the reasonable recovery period too. So that's another thing that's going to come to light now. The other thing, if you turn the page, Trevor. All right. There's other things noted on here that are going to apply as well going forward, just to know they can't charge you fees or charges for all the deferrals they may have given you. They couldn't, you know, call on your bank guarantee or cash deposit either during this time. You know, you should be provided with an opportunity to extend your lease for the period of the deferral period. Or at least 24 months, because, yeah, this is the time you're going to have to repay. So not only are you all of a sudden having to operate a business, get your staff in order, but, you know, all this is going to come to light too now. So do you want to turn the page again, Trev? Okay. So I think what people need to look at now is look at your lease. I know a lot of my clients even, you know, have let their option periods lapse because they were too hesitant to exercise an option on their lease, or they haven't renegotiated their lease and they could have expired. Now, if you go back and you have no lease, depending on your type of business, how much is it going to cost you to relocate? And, you know, that could be, you know, for a cafe that has a really nice fit out, that can be really expensive. For people that work in offices, obviously it's quite easy to move location. It's still expensive, but it's not going to be as expensive as having to defit the current premise and actually move into a new premise, you know, update all your details, get new business cards. There's a lot of expense, especially if you have a type of business that requires a, you know, a fit out. And, you know, at the moment, everyone's suffered and now they're going to have to expend this money to do a new fit out because all of a sudden they don't have a lease. So I think it's really, really important right now, because I know a lot of my clients have delayed all this because they've got so much uncertainty as to whether or not they were even going to survive the COVID period. So I think now that we're all going back, that, you know, it's a really good time to check your lease, check if you exercise your option, check if you need to renegotiate a new lease, and do it now before it's too late, because once you're not protected anymore, yeah, you know, you could be kicked out of your premises. And I do know a lot of people are looking for opportunity out there to go into businesses that haven't suffered during the COVID pandemic, and they will take your place quite quickly. And I've seen quite a few clients look, you know, buying businesses in these situations. So, you know, really good time if you do want to continue your business to look at your lease and make sure, you know, you've got that longevity as well, because that's a big issue. So I've just listed some common questions as well, just in relation to, you know, how long this legislation is going to apply. You know, things that they used to calculate in relation to declining turnover, you know, arrears because you're distressed. Make sure you speak to your landlords. Make sure you contact the managing agents. Don't bury your head in the sand. everyone has, been through COVID together. You need to communicate, because if you don't communicate, you've got no chance of sorting this out. And that's probably my biggest advice, is just to communicate. Everyone is under that same situation. And Trevor just moved to my slide of digging your head in the sand, because I find a lot of people do this. And definitely a lot of my clients will reach out to me because they've done this, and we need to sort it out. And a lot of people have been able to sort all this sort of stuff out themselves, which has been fantastic. But some of my clients just did this, and they speak to me and they feel a great relief that something's getting done, because our businesses are important to us, and a lot has been going on. So can you go back to the last slide, Trevor? All right. What else do I want to discuss? I mean, any businesses also that have opened after the 1st of June this year actually don't get any support whatsoever. But look, all landlords have to mediate. You need to have renegotiated your rent. I would do that ASAP. And again, please, everyone, just look at your lease and make sure it's still current. And make sure you do have a business to sell in the future with a great lease. So that's pretty much my advice today, is really the aftermath, and just reminding everyone that all those abatements will be payable, unfortunately, and to check you do have valid leases. So thank you.
Didn't want to unmute. There we go. And I'm going to put the head in the sand back again, because that's really good advice. Can I tell you, Vanessa, I was speaking recently in the same conversation was a bank manager and a commercial real estate agent, and both of them said, we wish our clients would come and talk to us. We wish the tenants would talk to us, said the commercial real estate agent. And the bank manager said, I wish they'd come and talk to us. And I'm sure Andre and John and Jenny would back that up as well, as have the conversation. Can't emphasize it enough, that's for sure. So we're going to change the tone a tiny bit now, because we are moving across to Darren from LiveNOW Business Coaching, and Darren is going to talk to us about getting those clients back and getting them spending money with us. Over to you, Darren.
Absolutely. Thanks very much, Trevor. And some fantastic points today already from our panel. But I'm going to focus on hopefully most of those things that we've spoken about already are reasonably in good order for you, which is great. So as a business coach, working with small businesses for many years now, it's been a crazy time. And when we look at, if you could move the slide, John, that'd be great. Sorry, Trevor, if you could do the slide, that'd be good. We look at, okay, now for the very first time, even from information come through today, we have some really, really solid certainty in place. So we have certainty that we're going to be opening up, and particularly for a lot of businesses who have been sitting back and potentially a little bit sort of like unable to do play their natural game. It's the best news ever for all of us. I'm sure you agree. And as Andre said, there's been a lot of sort of like, winners and losers, you could say, from this last couple of years. Surprising figures coming out of some big businesses, not only just global businesses, but smaller businesses as well, that have been able to take the opportunity, whether it's been planned or unplanned, to scale. So I want to talk today about a couple of things within that type of realm for you going forward. Imagine the Melbourne Cup, and I spoke to my one of my networking groups this week about the Melbourne Cup being the gates where everything's going to open up again. But let's just sort of like accelerate that by millions. And that's what's going to happen on Monday. And there will probably be no beer around that's going to be delivered because everybody at the pub. But for your business as a business owner there, this is, if you haven't already, the greatest opportunity to potentially reset, and, we talk about the strategy, we talk about what's been in position, your machine of your business, which is your HR, your team. You're focusing on your financial side, which is so crucial. And again, great information today from the panelists. How's your strategy been? Because, when we look at businesses right across most industries, and I've had the pleasure of working with most industries, is that there's always a solid strategy in place. The strategy before COVID was working quite well for most businesses, although a lot of them would probably admit they could go better. So when we look at your recovery coming out of this period and into the next 12 weeks, into Christmas and into 2022, it's a great opportunity. We're clearing the deck and having that opportunity with your team or with your key people, your executive team, to be able to say, well, what do we really need to do now to make the biggest impact on the business going forward? We've been traveling okay. We potentially got through. It's been tough. We've been homeschooling, we're doing all sorts of different things. And I'm sure on the webinar today, there's a lot of different businesses who've had all sorts of ups and downs. When we look at the strategy planning, it's an interesting scenario that we sometimes don't do it as well, even in the good times of business going forward. So when we look at it, now Andre said this very, very well, when we look at the analysing of where we are on a regular basis with a business, it's a crucial task which every business owner, director, key people in the business need to make time in their calendar to be able to work on the business more so than potentially doing sometimes some of the things that work in the business more so. But analysing the position, prioritising that criteria, getting those goals and the actions sort of like to a position where you can then start to load and fire, you know, and then hold accountability in the sense of how you can actually see the results, manage your numbers. Numbers so crucial right across finance and sales and business development going forward. And, you know, it's interesting looking at some of the businesses I've worked with over the last 2 years. A lot have disappeared, a lot are coming back, a lot have survived. Some fantastic stories, which, you know, just makes you feel so good as a coach, and as the other panelists would attend to. Great stories of resilience and people who are trading hard. But we need to have that strategic mentality at all times in a business. It's just one of the things that you got to have, you know. It's like a bit like having a baby, you know, you don't always know what you need to do, but you got to do the things to keep the baby moving in the right direction and be prepared to hand it over to somebody else in the future. There's another little small slide on there, John, if you want to, sorry, Trevor, you want to. So with the actual strategy you have in place for your business, and again, as a business coach, this is a crucial thing, is that those strategies do work. But imagine that this recovery, the lockdown recovery, you could say, whatever you want to term it for your business, is an opportunity for you to look at some things there that you've never looked at, and, you know, relaunch and reset and make a little bit of sort of like noise about what you do. What are your competitors doing at the moment? And some of the things that I listed there, is going through this with some clients, is what has changed? What has changed since the lockdown? What is sort of like happening in your environment of your industry? What are some of the things you've noticed that you could do or have started to do? And hopefully you have started to do those things, and start to get your team together. And whether you do a SWOT analysis, you know, strengths, weaknesses, opportunities, and threats, and look at those things and start to put them into your strategy and make it like a supersized strategy for the next 12 weeks, 15 weeks, you could say. Innovation and new ideas. It's been, as Andre said, it's been absolutely interesting to see the type of things that have happened to some businesses as a result of innovation. It may have been on the actual agenda, but usually in most cases there it was unplanned, and they're still making really, really good work for their business. So we've got to sort of like look at a little bit more of sort of like, well, now we have the opportunity to do some more planning because we've got the certainty back. So what can you actually do differently in your business? Whether it's a new product, a new service, whether it's bundling, whether it's, you know, it's just brushing up on your skills to convert, to get yourself moving in the right direction. Because again, from Monday or Tuesday and this week and next week and the weeks that proceed after that, people are ready. You can feel it. They've got money, they're cashed up in a way, and they want to get out there and they want to celebrate. And the celebrate is about consuming products and services from businesses. New products and services, and the delivery, crucial. Delivery has changed completely, as you could probably see. Most things now, even more than they ever have been, are online. More deliveries are actually getting delivered as parcels online through that type of medium, just because of the sheer fact. Will people go back to that like they'll go back to the office? Maybe not. Maybe they'll just like the little bit of shopping face to face and a little bit of sort of like not getting the stuff done online, you could say. And then from that, with your team, as an exercise, if you haven't already, what is the next 5 crucial moves that you need to do? And they could encompass some of the stuff that you know, Vanessa spoke about, that John spoke about, that Jenny and Andre, and then Bianca will and Trevor will as well. What are the 5 moves that are going to make the biggest difference? And like any good business owner and a business professional who loves to be in business for all those great benefits, using the 80-20 rule, which I'm sure you probably know, is about, you know, what's the things I need to do in the 20% that's going to influence the 80% of my success going forward. Finish with a plan going forward, so you can actually have something to go for in your business with your team, with the help and the assistance of professional people like you see today on the panel. Thanks, Trevor. So, you know, turning a strategy into action, very simple for a lot of business owners who are doing this regularly, but now think about what you can capitalize on in this recovery period for the lockdown. 30-day plans, 30-30-30 focus are really good. deliverables into pathways, make it easy for your team and yourself to be able to chip away at the small incremental goals, a bit like Kaizen, the Japan, small little incremental movements towards getting success in your business. And of course, that includes everything in the machine, including what we've spoken about already today with the panel. Deliver the work based on those priorities. What's the most important thing will make a big difference going forward? And then, for a lot of the industries and businesses and the small businesses these days, create a really good, fun way to actually check your ability to deliver, maybe gamify it, which a lot of industries are finding really good, particularly for some of the staff that come through. If you can move on, Trev, that'd be great. There's a couple of things that came out of working with a lot of clients over this period and, surviving with them and sort of like helping them get through this period, is that we sort of like came to this conclusion there that there was a convenience factor now more than ever for most businesses that chose to look at this as a little more serious part of delivering their service and their products. And what you haven't noticed there, and again, you can look at the numbers of the people that are surviving big time, is these are the crucial things here that's actually making a big difference. And it did start before COVID, but it's actually now fully here, whether we like it or not. The best selection, by far the best selection, whatever your product is, whether you have ways to be able to bundle different things together, products and services that you haven't thought about. Again, think about your competitive edge and your market dominating position. The speed of the delivery, the ease of purchase, again, whether it's online or face-to-face, and the delivery. Is it easy to get this product out to these people, if that be the case? Is it easy for people to grab what your product and service tends to be, whether it's online or not? And then a low risk mentality, which has really been sort of like always part of business. How can I start with this person as a product service? How can I use them and solve my solution that I never really had in the past that's low risk? Payment plans, opportunities to try first before you buy. You know the story going forward. So these are some of the things, and of course, price and value always comes into it. But think about your business and the convenience factor. What's changed and what could you bring into your business to have more convenience, to go with this market that continuing to bubble away at convenience 101? As a vendor and a business owner, your power has now changed, as it hasn't been the same for probably 10 years, because the consumer believes they have the power. So their convenience on their mind is a big thing to go forward. Thanks, Trev. I wasn't going to talk too much about the winners and the losers, and you know what's happening at the moment there. There's a huge amount of money being spent on some things that you think, my goodness, I'd love to be part of that. There's some people that have scaled so well, as Andre said, which is fantastic. Think about what you can do to actually get your strategy back a little bit more focused on winning for you and winning for your clients going forward. And when you do that, you'll get yourself into the position of being able to not only scale your business there, but adapt very quickly to the market. Because it's always about what the client needs and wants, as you know. And, whether it's getting more leads, whether it's getting more conversions, whether it's getting more transactions. We obviously talk about net profit and profit numbers and percentages for businesses. So that is the king at the moment, to get your profit back up to level and stay out of the danger zones of the ATO and the accountants and that sort of thing. Next slide, please, Trevor. Lastly, before we finish, to wrap up, it's really important. I've seen a lot of business owners under all sorts of pressure, and I'm sure we all have experienced people, friends, family, that are really doing it tough there. How are you actually going yourself, and what sort of ability in your business and leading your team to be able to take the responsibility of, I really need some help. I need some support. I can't do this on my own. And I want to impress upon you the importance of being able to say, put that stick in the sand and say, I really need some help. And, by getting the right position in that type of mentality, you can go forward and start to get that help for your business, whether it's, outsourcing some of the things that you've been doing for 6 or 7 days a week, whether it is about hopefully finding some solutions to plugging holes in the business. But, we're very good at trading hard in small business. It seems to be like this armor that we carry around with us. And I was want to rip that apart a little bit and say, well, no, your business is about success, and it's about a legacy, and it's about your financial security. It's about being with your family, getting home on time, doing some of the things you really wanted to do as a result of the business. And those things there, regardless of the environment, need to be very much a priority going forward. Pivoting and scaling and building, of course, is a really cool thing as well. And stepping on the stage to play your part is a very, very important thing. So don't underestimate the importance of looking after yourself. It's not over here by any means with this change of landscape for a lot of businesses, but there is support available from grants, funding from people like ourselves who are more than happy. And I know most of the people on the panel today love helping people. Yes, it is about our business, but we love seeing business thrive and be successful. So in conclusion, just to finish off the next slide, Trev, if you wouldn't mind. The strategy in your recovery is seriously about adding to what you already do so well and some of the things you want to capitalize on going forward. And what do you need to do, whether you have the ability to actually realize that now or take some time to think about it, put it into practice, get that game plan up and running so you can actually get it going. Break it down into a very, bespoke 30-day plan with the help of your team or yourself and your key people. Find out what's changed. Find out what's changed since you actually took the downturn of your income, or you've actually seen some changes in the way people are buying. For some clients, it's about readjusting things like the costs of their business. For others, it's putting their prices up. And for others, it's like there's a perfect time now to add some more products and get online and do more of that stuff that we've never thought about doing because we thought we were too busy. Your next slide.
I think Darren's frozen there. Am I the only one seeing that?
No, he's frozen to me
Yeah,
too.
frozen.
He's
He's
definitely
frozen.
frozen as well.
Yeah, it's frozen.
We'll
We
count to
lost
10
him.
and see if he comes back.
I think we entirely lost him, actually.
I think we might have
Yeah.
lost Darren from there.
No,
Oh, no,
He just
he's
moved?
back. No, he's still frozen. It's windy in the Shire. He might have
It
blown
could
off.
well be as well. Look, I'll move across now to Bianca, and hopefully Darren can recover to get back into join us towards the end there. So thank you, Darren, and if you can hear us at the other end there, and the joys of working online with Zoom and NBNs and all sorts of other things. So Bianca Schwartzwald from Be Thriven, can I just say, those of you who are attending today who are members of the Chamber will have seen exactly the sort of thing that I think Bianca is going to talk to us about. We should have been doing face-to-face networking functions and workshops and webinars for the, not webinars, face-to-face events for the Chamber, particularly for the month of October, which was to have been New South Wales Small Business Month. But for obvious reasons, that was cancelled this year. I think it's going to be put forward to about March or April next year now. But we had to find a way to communicate. We had to remind people we were there. And so we've been producing newsletters every couple of weeks, sending them out with information for our members, trying to collate as much as we could and find sources for people. But you've got that problem. Darren's just been talking to you about getting that money coming into your business again. How in the world are you going to let your clients, old ones, new ones, potential ones, know that you're still around? So Bianca, over to you to tell us how to do that, please.
Thank you, Trevor. I'm Bianca from Be Thriven. I'm an online business manager and also a virtual assistant. So if you can go to the next slide, Trevor, and to the next one. I'm going to give you lots of tips today. So I'm just going to dip in quickly what I do. So I do social media for small businesses. Platforms are LinkedIn, Facebook, Instagram. And so I basically create content calendars for my clients. I help them that the posts go out every week and that they're visible, and I help them with a strategy so that they're not always posting the same things, and I help them to come up with ideas. I also create content depending on the business. I do graphic design, very basic though, like I'm not a graphic designer. And then analytics, very important at the end of the month to see what has gone well and what hasn't. Email marketing, I work with a platform called MailChimp. I'm sure that's well known. And I set up accounts, send out newsletters, set up templates, you name it. So so that is just quickly about me. And now we're going to have lots of tips, so make sure you have your pen and paper ready. Okay, so I often get asked, which platform should I be posting on? And that really depends on the business, what kind of business you have. So if you have a professional service-based business, then I would definitely say go on LinkedIn. You can also go on Facebook or post on both platforms the same content. That's okay as well. If you are like a gym owner or you do something with wellness, I would highly recommend to post on Instagram and also on Facebook. But if you have professional services, I wouldn't really recommend to go on LinkedIn because like Instagram is more B2C. Yeah, and so how often should I post? Now, this is a favorite question of mine because it's always depending on how much time you have spare, and usually no business owner has got any time spare. So, but then a lot of time I find that my clients are starting to, well, they want to, well, before they become my clients, they say, oh, I'm gonna post like 3 times a week, and then they do that for 3 weeks, and then they don't post for another 6 months because they get overwhelmed. So start with baby steps, and maybe just post once a week and see how that goes. And if you then, if you then find like 6 weeks later, oh, well, maybe I can actually do 2 posts, then that's good, but just be consistent. Consistency is key. Yeah. And when should I post? So it depends on the platform. LinkedIn, I always recommend posting anytime on a Tuesday, Wednesday, or Thursday around 10 a.m. in the morning is good. My preferred days are Tuesday and Thursday, but test it out. For LinkedIn, for Facebook and Instagram, it is usually a Wednesday and a Friday, also around 10 a.m. But here again, test it out. Like if you are a wellness coach and all your customers are online at the weekend, why don't you try posting at the weekend? So these are just some guidelines, like try it out yourself. I can highly recommend trying it out and see what works. For me as well, sometimes Facebook 4 o'clock works really well too. And what should I post about? Yeah, so there are so many things you can post about, and everyone always it's just baffled because I don't know what to say. But I promise you, there are so many ideas. Just think about all the questions your clients ask you, write them down. To you, they seem to be so obvious and yeah, everyone knows this, but this is not true. So just write that down, all the questions you get from your clients, and then you can create posts on that because people love tips. So then about your business, how you started your business, what your values are, and all these kind of things. However, I will post down 30 ideas what to post on social media, so you can have some more inspiration. Yeah, which posts perform best? So it's generally posts with pictures, but which picture should I use? And ideally you use something where you are in it yourself. So yeah, maybe where you hold up, I don't know, maybe a tip, on a piece of paper, or maybe you're out about in, let's say in a restaurant, and you just something like that where you where it obviously makes sense with your business. But yeah, so those perform really well. Otherwise, also graphics, where you basically put something out where people can see straight away what this post is about, like 10 tips for your social media, right? So that is something that is very good. So yeah, and that is social media. Oh yeah, and videos. Of course, I forgot about videos. Yes. So videos are obviously top. So if you can do videos, and people hate it, but it's very rewarding. Next slide, please. So we're moving over to email marketing now. So best time to send, I usually say always a Tuesday or a Wednesday around 10 a.m. as well. 10 a.m., just write down 10 a.m. everywhere and you'll be good. And personalization is another tip. So when you send out an email, you can, with MailChimp, you can put the first name in the subject line. So for example, Bianca, here are 10 email marketing tips for your business. And you don't have to do that. It works for some people. Some people are more inclined to open it then. But yeah, ideally, what most important is that if you do it in your subject line, not subject line, in your greeting line. So if you have the name, the first name of your clients, then please put that in there. Makes a huge difference. Now, words to avoid. So sale, free, cheap. Now you wonder, why should I avoid those words? It's because they are spam triggered, so they don't actually arrive at your clients. It obviously works sometimes, it depends. And also it all depends as well, on if you have opened those emails from these people before. So, there's a lot of things behind it, behind spam triggers, but these are some words they, usually get more easily put into spam. But I will put down 10 words to avoid in the chat box as well after this. Then words to use. I are effective words that are good and people are happy to see them and they want to engage with it. It's like new, now, deserve, like things like that. So if you can incorporate that into your emails, that would be very good, particularly in your subject line. And yeah, so last slide then, Trevor, please. And that's basically it. So how you have learned something and I didn't speak like a million miles an hour so that you could still hear me or still could write something down. Yeah, and otherwise just please get in touch and I will put the, like my little things in the chat box. Trevor, can I just do that? Can I put that down in the Q&A or where do you put it down?
If you put them in the Q&A box, all the attendees will be able to see it in there, Bianca. And as I said, folks, we'll be sending out all of our presenters' details to all of you probably tomorrow morning so that you'll be able to make contact. If you don't have a chance to write down these email addresses and phone numbers, etc., I'll make sure that everybody gets a copy of that information sent to them. And just a bit of advice at the end of, because I'm the last presenter, we have got a couple of questions. There's one there that I'm going to throw to Darren at the end of this. And welcome back, Darren. I'm pleased that the IT issue sorted, thank goodness. And there's also one I think I'll let John and Andre back between themselves as well in there at the moment too. So just a little heads up, we do have a couple of questions coming up. And I've got one for Bianca. There we go. So moving along, development pathways, and I particularly want to talk about industrial relations and HR related matters, and it centres around this little graphic here. There are going to be a whole lot of opportunities for businesses and their staff to fall through the cracks. So businesses, as we've heard today from a couple of presenters, businesses fell into broadly three categories during the current lockdown period. There are the ones who thrived, whether it was due to government support or just going really, really gangbusters. Those businesses have done well. Their single biggest problem has been that they can't get supplies. Have a chat to a builder about trying to get timber at the moment. And by the way, I heard from a builder this morning that the cost of timber between him quoting on a job 6 weeks ago and this week has gone up 25%. And that's assuming they can actually get the timber. So they've got those sorts of problems around that. They've also got problems around getting employees and staff because a lot of their employees were people who were from overseas who have gone back home. And that was during the lockdown generally, but they're just not coming back in at the moment, of course, because the airport is well and truly closed. They can't even come from interstate. And where the way we've been locked down in Sydney, they can't even come from a neighbouring LGA in some cases. So they've been going well. They've been chuffing along and doing a lot of money, thank you. You've got the businesses in the middle that have traded, but under difficult conditions. Cafes are open and only being able to do takeaway. In some cases, that's not really affected them too badly. To John and Jenny's point, they've got the cash flow happening because people are coming in and buying things. They haven't got the staff wages. They haven't got the expenses. All their tables are stacked away in a corner. They're not paying 2 or 3 chefs. They've got just one person in the kitchen cooking maybe some egg and bacon rolls instead of cooking the full meal. So the costs are balanced out and it's not too bad. I bet they wish they could open up again, but they've got through. You've then got businesses and folks go for a walk through a Westfield shopping centre, Miranda or Hurstville in our local area or other ones like that, and just have a look at all those doors that are closed. And sadly, some of those doors in our local area here in Hurstville, and I've noticed some in Cogra, are not just closed now. They've got a sign on the door from the agent or a liquidator saying that they're gone, they won't be back, or they've just made a decision not to come back because it's all just been a bit too difficult for them. So there are going to be businesses like that, but there are going to be a lot of them that are going to be opening the doors. What's happened to their staff? I think Andre mentioned earlier that the staff have gone. They've moved on to other roles. The builder that I was speaking to today has actually put on 2 new employees. They have never worked in the building trade before. They're essentially labourers. They're pushing wheelbarrows full of concrete and things like that, but they were working in retail stores and they just found that there was an opportunity to get out and do something else. So they've actually done it as a career change. But there's going to be shortages of staff. We don't have people coming into the country. Again, in our local area around Hurstville and Cogra, a lot of overseas students who are filling up those apartment blocks around here. They're just not here anymore. And so staff are going to have to be found somewhere for some of these stores to come back again. Some people have literally retired. Some older staff members have said, you know what, I was thinking of pulling the pin at the end of the year anyway. I'm just not going to come back. So I want to focus today on some of the cracks that you can fall into, because there are businesses out there. And that builder, again, to refer to him as a good example, he said, Trevor, that's the first time in 5 years I've had to put somebody on. And so much has changed. The award that they're under is different, that he wasn't aware of. The contract that they need to be employed under as casual labourers was quite different to what it was before as well. So a couple of things, if you are bringing on staff now, employing new people, the first thing is that every single employee, whether they are full-time, part-time or casual, must be given one of these. It is a Fair Work Information Statement, and they have to be given that when they start work with you. Ideally, you'd send it to them a couple of days before when you send them out the thing from the ATO to fill out all their tax details and their superannuation choice details, but it must be given. If you do not give them that, you can get a big fine. And Fair Work Australia will occasionally come knocking on your door, and that's one of the things they'll look for. They will also ask about, are you giving people pay slips? They'll want to check if you're paying the right wages. But if you haven't given them a Fair Work Information Statement, you are behind the 8 ball from number one, because you are breaking the law. It must be done. Now, you might have been doing that. You're quite used to doing that and say, yes, Trevor, I knew all about that one. I suggest, by the way, that you deliver it in 2 ways, that you give them a hard copy. It prints both sides of a sheet of paper. It doesn't have to be printed in colour, but you should also email it to them or do it in some way where there is a record that it has been given to them as well. In March this year, if you haven't employed anybody since March, you had your staff that have been with you for quite some time and good regular employees and so on. As of March this year, you also have to give casual employees a casual employee information statement. This outlines the rules around what being a casual is all about. And you may have heard we've had some cases recently that ended up in the federal court to decide that some casual employees were entitled to things like sick pay and holiday pay because they were supposedly casual, but they were treated like full-timers. So this is the result of the legislation that came through. It was enacted in March this year, and employers had until the end of September to give existing employees one of these. The rules are a little bit different depending on whether you are a small business or not a small business. And I'm now going to get on my hobby horse. Don't listen to the politicians about what is a small business. We had our federal treasurer a couple of weeks ago say that small businesses up to $250 million of turnover, for goodness sake, were getting JobKeeper money. The ATO apparently say a small business they think is anything up to 10 million. The Fair Work legislation says a small business is a business with 14 or less employees. The moment you have employee number 15, whether they are full-time, part-time or casual, you are no longer a small business. And there are a whole lot of things that are different for businesses that are small businesses and ones that are not small businesses, including what happens when a casual employee is on your staff. If you are not a small business, if you have just 15 employees, you are obliged to offer a systematic and regular casual employee permanent work, or tell them in writing why you are not going to make that offer. If they are a small business with 14 or less employees, the casual employee can request all of that. This document outlines their rights and your obligations and explains exactly what it means to be a casual employee, and it stops them expecting to get sick pay and things like that because it tells them in there. Same thing, deliver it 2 ways. Give them a printed copy so that you can discuss it with them and make sure that they understand it, and also send them something along the way via an email is a good way to make sure that it's tracked as well. I'm not going to talk about vaccinations. It's the elephant in the room. And the simple reason I'm not going to talk about it, well, certainly not to any large extent, is the fact that there is going to have to be individual cases. Some of them will end up in courts about employees wanting to come back when they're not vaccinated, about you having to deal, unfortunately, with annoying customers who refuse to show you their vaccination certificates and all of that. It's just a minefield. It's a whole presentation all on its own. What I do want to talk about is some of the stumbling blocks, and as Jenny said, there were some changes to legislation while we've been in lockdown. July 1's national wage case increase is a good example, and by the way, that rolls out progressively depending on what award your employees are under. Some of them come in right away on July 1, some of them don't kick in until December each year. So make sure that you understand your award. But Schedule X was added to pretty much every award last year during the lockdowns. And what Schedule X says is that employees can be stood down if you can't operate your business because of the lockdown. It also says that they can choose to take their annual leave at half pay for twice as long. So if they've got 2 weeks annual leave owing, they can take 4 weeks and take it at half pay. Schedule X had a sunset clause, but depending on the award that your employees work under, that sunset clause, that end date was different. And for some awards, they brought it back in again this year during the current lockdown again. So make sure you understand your award and make sure that Schedule X does it apply to you or does apply to you. Schedule Y, Schedule Y was added just for aged care employees, and it means that aged care employees get paid pandemic leave. And to the best of my knowledge, they are the only employees that do get paid pandemic leave. However, it did stop applying from the 29th of March 2021. Why have I included it here? It's because we've just had lockdowns, and the aged care sector is one that's vitally important. Make sure that people have got vaccinations, and it's also one where they're probably at risk of catching COVID if they're not vaccinated, or even if they are. So just bear in mind that even though Schedule Y did end in March, keep your ears and eyes open. It could well be brought back in again. Enforceable government directions, employers are not obliged to pay their employees during these times, but employees can take annual leave. And that refers back to that Schedule X where they can take their annual leave. An enforceable government direction would be where the government says Georges River Council or Bayside Council is now a LGA of concern, and these are the restrictions on travel. And you say, well, we can't operate our business on that basis. Or we've had to close the doors because of restrictions. They are enforceable government directions. They are out of your control, and you are not obliged to pay your employees. And that's why the government brought in this $750, which was, I think, initially $500, went to $600, and now went up to $750. I said we wouldn't talk about COVID, about vaccinations, but just to say the place to go for information about vaccinations from a HR, from an industrial relations point of view, is the Fair Work Ombudsman, Fair Work Australia. I've put this one in here. Be a little bit careful when you Google search or Bing or whatever you use to search, and you put in coronavirus and Fair Work. There are two legitimate sites, and they've both got .gov.au in there. FWC is Fair Work Commission, and Fair Work is the Fair Work Ombudsman. There are HR companies out there who pay Google money, which they're entitled to do, to get to the top of a search. One of them at least uses a URL called something like Fair Work Help, which sounds a little bit like Fair Work Ombudsman or Fair Work Australia. They are not Fair Work Australia. They're entitled to do that. There's no law against it. But just make sure if you want to go to Fair Work Australia that you are actually going to Fair Work Australia. So look out for that .gov.au in there. And the final thing I'd like to say, please, is don't guess. Ask somebody if you're not sure. It won't cost you a lot of money to pick the phone up and ring. It doesn't have to be me, but ring a HR consultant. Maybe even start with your accountant, who will say, no, that's not a question for me. That's a question for a HR consultant. But please don't guess. If you're unsure about anything, believe me, your employees will be asking if they are not sure. Okay, get yourself ready for employees coming back with questions. I'll bet you now, if you've got a couple of staff who you haven't had a lot of contact with while your business has been closed down, or you've been running without them in the business, they're going to come back in and they're going to have questions like, how many days annual leave have I got? And you are obliged legally to give them a pay slip. You are not obliged to have the annual leave balance showing on that pay slip. A lot of them do. Jenny's nodding there. By the sound of that, I'm guessing Xero does. She's nodding. So a lot of the pay slips do have that on there, and it's a good thing to put on there, let's be honest, but it's not a legal requirement. However, if an employee asks you how much annual leave they have, and you sit there and you think, oh, for goodness sake, I'm trying to run a business, mate, will you just, look, I'll get back to you. And you don't get back to them, or you don't want to tell them for whatever reason because you don't want them to take holidays. No, you can't do that. You have to tell them. You have to tell them how much annual leave they have if they ask you. So just be ready, be a little bit patient with your staff is something I'd say for you. They've been in lockdown as well. And look, we're all business owners. We've all done it stressful. I'm a sole trader. I don't have staff, but believe me, I've done it tough. My partner hasn't had a shift at work since a week and a half before the lockdown. So our household income was affected. New businesses out there, and I've been speaking to many of you over the last couple of months. I know that you've done it tough. Your doors have been closed. Can I say the one thing that not only has touched my heart, but makes me love working with small businesses is every single one of them has said to me that they're worried about their staff and they're concerned for them and their welfare, whether it be mental health or financial health as well. So good on you for doing that. And believe me, all of us here tonight are certainly all with you in all that as well. So folks, that wraps up all of our presentations. I'm going to click over to this side here because it's question and answer time, and I'm reading from the Q&A box. Please type in any additional questions you may have. I noticed John Reilly is typing an answer to one of the questions in there, so that actually saves me there. I'm going to read the question out for everyone's benefit though. So, what are the tax debts, including superannuation, of a company that a director is personally liable for? John, would you like to perhaps unmute your mic, or Andre, and see if you could answer that one for us, please?
I did start typing it, Trevor, and just realised that you're going to talk about them at the end. For me, I think this is really an area for Andre. I might get him to answer it. He could probably articulate a lot better than I can.
Yeah, so look, there, with respect to GST and PAYG, directors can be personally liable for those debts. So essentially, if you haven't paid your PAY and GST, and you get issued with what's called a director penalty notice, the director penalty notice will basically say you've got 21 days to either contact the ATO and enter into a payment plan, put the company into liquidation, or put the company into administration. And if you do not act within 21 days, you'll be personally liable for the PAYG and GST. So there is a little bit of an out there that gives you options to avoid personal liability. There is, however, a new type of director penalty notice which was introduced, which was called a lockdown director penalty notice. And essentially, if you haven't lodged your BAS within 3 months of when it was due, and you get issued with a lockdown director penalty notice, you're buggered. So basically, you are personally liable and you can't do anything about it. So what I always say to clients, and this is great advice for any business owner, even if you can't pay your tax, make sure you get your lodgements done within 3 months of when they're due, because that means that you can only be issued with the standard director penalty notice, which is the one you can get out of. With respect to super, directors can now be liable for super as well. So essentially, for example, your June quarter super payment is due on the 28th of July. If you can't pay your super by the 28th of July, or can't pay your super, by the 28th of August, you have to lodge what's called a superannuation guarantee charge form with the ATO. So it's effectively a declaration to the ATO that you haven't been able to pay your super. If you don't get that SGC form in on time, which is effectively almost 2 months after the end of the quarter, and you get issued with a director penalty notice, you will be personally liable for that super as well. So again, even if you can't pay your super, don't have your head in the sand. Make sure you fill out your SGC form and lodge it with the ATO. In addition to that, I touched on before, directors can be personally liable for all debts. So that's all your other ATO debts, all your supplier debts as well, if a company is traded whilst insolvent. So basically, if a company has bumbled its way through and ultimately decides to go and get a liquidator involved, a liquidator will do an analysis of your cash flows and work out when he thinks that you should have known you couldn't pay your debts as and when they're full due. And a liquidator can issue a demand to a director, which makes them personally liable for all those debts incurred past the point he thinks you should have known you couldn't have paid them. So, the kicker there is, that great slide, get your head out of the sand and make sure, even if you can't pay your debts, make sure you're still getting the right lodgements in on time. because that will provide you with some protection if you start getting issued with notices from the ATO. But again, if you get any demands from an ATO or any supplier, any government agency, go and speak to your accountant or your lawyer or your bookkeeper if you've got a close relationship with them. It's really, really important.
Thanks, Andre. Very, very comprehensive. And you just reminded me of something when you said that about getting notices from the ATO. And I think Jenny alluded to it. Be really careful. There are a lot of scams out there at the moment coming in on your mobile phone or on emails by organisations pretending to be the ATO, and it looks like an ATO website, etc. Just really be careful before you click on links and open emails and so on, and have that chat to your staff. If the staff access emails in your business, just make sure that don't open anything from the ATO. Leave that for me, even if it's not the ATO. Darren, a question from you. It's from the president of the St George Business Chamber, Alan Zreck, I think, and he's saying, thank you for your presentation. What do you say to businesses operating a nano business who are just breaking even as a startup? Where do they find advice on what they need to get their business up to the next level?
That's a good question. The New South Wales government has a very good program called the Business Connect program. It's a funded advisory service, and that's run out of New South Wales in most of the LGAs. In our St George area, it's Realise Business who run this program, and what it entails is around 32 hours of advisory one-on-one coaching from a specialist, and they have specialists in different areas of different businesses, industries, and you book in as part of this Business Connect program. You can apply online, businessconnect.gov.au, I think it is. I cut my teeth in advisory with that program and still do work for them nationally as a keynote speaker. So it's a great program. So the first 4 hours are free, Alan, and then there's a heavily subsidised advantage of taking the next 28 hours, which I think $20 an hour or something like that for advisory services. Build a relationship with an advisor, use the accessible services from a company like Realise Business and Western Sydney Business Centre. They're all around Sydney. They're what we call the old BECs, the Business Enterprise Centres. And they have some fantastic people and some great services, webinars, free things that you can go to, breakfasts as well. So it's an ideal starting point for a small business owner who has a limited budget. But I would absolutely recommend, if you're a coach, to go advisory first and get yourself into that mentality of working on your business, and then you can reach out and trust potentially other people. The other thing that is available to all Australian residents is the federal government has a funded program called ASBAS. It's Australian Small Business Advisory Service. Now they also run funded advisory service to only just a couple of key industries, and mainly in development. And also attaches them into R&D grants as well, so research and development grants, which are also very much worth for some businesses, startups, and particularly working on innovating products for the nation. There's a huge range of information. So you can search for ASBAS through the Australian government's general websites of primary industries. You can also obviously go to New South Wales government, and you'll go straight to Business Connect. So I'd get hooked up with those guys straight away. I recommend it to clients. And then, as a business coach, I could assist with that as well, coming in at a different level for them.
Terrific. Thank you, Darren. And I've got one for Bianca. The chamber, as I said, we had to pivot, and I'm starting to hate that word, but we've had to pivot from doing face-to-face events at this time, where we would normally have done a lot of them, to keeping in touch with our members and our associates via email and information. They're essentially newsletters. And by the way, if you like the look of that, that's thank you to Bianca, who designed the template for us for the chamber. But Bianca, what would you consider is an acceptable rate or percentage of opened emails from a campaign like that, or an information like that?
That's an excellent question. It usually is around like 25%, maybe a little low. I think it's 22, like the last time I checked, but it is very low. So when you think, yeah, I'm gonna have an 80% open rate, then like, I'm sorry, you're wrong. And because a lot of people, when I start working with them, like, oh, well, why did no one open my email? It's like, you had a great open rate. It is a lot less than you think. And also some of it goes in spam, because people yeah, because people like it just get filtered through. So yeah, so usually like the most of my clients actually we have a pretty good open rate, so it's like around like 30, between 30 to 40, sometimes even above 40. So yeah, it really varies. Also, obviously, what you posted, what you're sending to them. So if it's all sale, then maybe not so much.
What about
Lovely.
dry old accounting ones? What's the good rate for that?
There we go.
I actually haven't sent out any accounting ones yet, but I would imagine if they were interesting, then like and everyone is interested in accounting, then
Interesting accountants. There we go. That's right. Folks, we've done really, really well because we've managed to complete tonight's webinar right on time, I'm very pleased to say. I want to, on behalf of the Business Chamber and all of those attending and all of those who are going to be watching this on YouTube and on the Chamber's website, a really, really huge thank you to our presenters today.